Good afternoon. I'm Paul Zachary Shelton Jr. of Warwick Shore Advisors. Today we're going to have another conversation about the recent market volatility, how to position your portfolio when you have an extraneous event such as the coronavirus. Stay tuned. We're going to discuss that next. Over this past weekend, we had our second death in the United States as a result of the coronavirus. Now, the volatility around the coronavirus is continuing to rise as we are continuing to see more cases around the United States and more cases around the globe, essentially. As a result of the heightened volatility from the virus, the Federal Reserve has positioned itself or kind of placed a rhetoric in the market that they will cut interest rates, at least to provide some stimulus to some of the sluggishness that we've seen in economic commerce across the United States and across the globe as a result of quarantines from the virus. Many factories across Asia and across China have been closed as a result of the virus to prevent the spread of the outbreak. As of this recording this video right now, the 10-year Treasury yield is yielding about 1.08%, which is extremely low and has seen a precipitous drop over the last couple of weeks as a result of the heightened volatility in the market. With the Federal Reserve in a position to cut interest rates, this could potentially and will potentially lead that yield for the 10-year below 1%, as well as yields on the rest of the maturities on the rest of the curve will shift down accordingly as well, putting us in a lower interest rate environment. The negatives about this is when we do see economic softness, or when we do get to a patch down the road where we may be in recessionary levels, the Federal Reserve will have less weapons in its quiver to combat that recession. Outside of the coronavirus, if you were to look at the fundamentals of our economy, you would be very excited. We still have a very, very healthy employment picture. Personal incomes did rise a little bit in the month of February, which is positive for the overall economy. So fundamentally, we are still sound as an economy. The biggest question will rise is when we do get a handle on the coronavirus, what will happen after that? Will this effect or the sluggishness from the lack of commerce or the slowdown from the factory closures be enough to really put a huge enough dent in this bull market run to cause the recession? Or will we be resilient and continue to trade based on economics and the underlying strong fundamentals of our economy? So in the normal course of conversation and travel and talking to different people across the country, I received a question a lot about how to invest during this high market volatility time, or how to invest around events such as the coronavirus. And I always have one simple answer for everyone, is to know your goal. If you know your goal and you know your investment horizon and you build out a portfolio that is suited to meet those goals in your investment horizon, then you will be prepared for any market volatility that arises. Now, there could be a potential when the volatility happens with such breadth or such velocity that it will cause initial angst and it will cause a little frustration. But these are the times where you have to really be disciplined, really stay focused to your plan, and understand that the portfolio that you designed and the portfolio that you built out is durable and set up to meet your financial needs. Now, if you come across a situation where the market volatility is causing a lot of unsettlement or a lot of unrest internally, then it's very possible that the asset allocation that you have currently does not work for you, and that needs to be addressed, and it was never correct all along. As always, if you have any questions about the current market volatility or about retirement and how to position your portfolio in this type of environment, please reach out to our firm directly. We look forward to working with you and helping you reach your financial goals. You can reach us at investments@warwickshore.com. And as always, please like, subscribe, and share this video to help grow the financial literacy of our globe. Thank you so much and have a great day.